Good afternoon, and welcome to today's presentation on market recognition and the effects of the stock market and current market conditions on Bank of America stock. Quick overview of the objectives, looking at being able to recognize patterns in the historic stock price of Bank of America as it relates to key indicators, and also using those key indicators and overall analysis to formulate a recommendation on whether to purchase the investment, hold the investment, or sell the investment. Bank of America, of course, is one of the largest banks here in the United States, with major competition from Chase and Wells Fargo. They have a company vision called responsible growth, which simply put is the focus on trying to make their clients' lives better by making smart decisions for both clients and shareholders. Current market conditions, anytime we're talking about investing, we want to look at that. We still are, of course, feeling the effects of the COVID-19 pandemic, both in the United States and in the world. The U.S. is still suffering from the historically low interest rates, and of course, there are still some lingering effects from the 2008-2009 financial crisis. Even though we've seen a great recovery over the past 11 years, there have still been some latent concerns with the market conditions as of late, harkening back to those days with some of the daily drops and volatilities. With each section, each analysis that we look at today, we'll do a quick definition of the analysis itself. First one is correlation analysis. With this here, we're looking at different factors and events that could correlate to the changes in the stock price and how that is affected there, in which case we'll be looking at key indicators that potentially affected it, and also maybe even some that didn't affect it, which was surprising because under normal circumstances we would expect there to be some effect there. Correlation analysis itself, looking at just this year to date so far, we see that towards the end of March, which is when the first round of economic shutdowns due to the COVID-19 pandemic started, obviously a lot of financial centers closing, a lot of people out of work, a lot of potential loan forbearance and potential forgiveness scenarios going through, interest rate incomes dropping, you name it, lots of changes that and not to mention the fact people needing their money out of the markets, so selling their investment holdings, including mutual funds, which obviously Bank of America is going to be held in there as well. Then of course from the end of March through now, saw some other changes towards the end of July, a little volatility there with some big investment moves. Overall, we saw a spike towards the end of June as a lot of the country started to open up and then pulled back again. So the pandemic and interest rates changes have been some of the biggest indicators as far as how they correlate to the stock price itself. Those indicators, of course, are the COVID-19 pandemic. With economic shutdowns, it affects everybody, and unfortunately, the stock market is not immune to that. The interest rates themselves, with the Fed rate being at a historical low between 0.25%, which then of course goes on into the bond market index rate, which is where things like your mortgage rates are priced off of, and then of course paid interest, which is the interest that's paid back to the clients of a bank as they put their money with a financial institution. If those rates are low, you're not going to attract new customers, and therefore you're going to see a drop in overall incomes, even though you may be cutting elsewhere to where your profitability may still stay high, but the perception is that income has waned. Next area we're taking a look at are whale tracks. Simply put, this is the effects of large scale investors, most of the time institutional investors, and their large purchase allotments, whether they're purchases or sales of individual stocks, and how that's affected. The biggest one that we saw this year was Berkshire Hathaway with their purchase of shares towards the end of July. The interesting thing, though, is what we noticed is the biggest trading changes came in March when those volumes went through the roof and the price dropped drastically. And in July, there wasn't a huge impact by the Berkshire Hathaway acquisition of a large amount of Bank of America stock. Now, Berkshire Hathaway itself is an investment company that, of course, is owned and run by Warren Buffett. What they did is they increased their position in Bank of America Corporation between the dates of 7/20/2020 and 7/30/2020, with the purchase of an additional $1.73 billion, which put their overall position just over a billion shares, which is their second largest position behind Apple Incorporated. Surprisingly enough, though, we didn't see this affect the stock price drastically, which was something a little out of the ordinary. We expected to see some kind of a correlation there, but they did it in such a way that it didn't shock the markets. The next thing we'll take a look at are support and resistance levels. Support level, simply put, is the lower end price that a stock tends to not really break down through. Now, while it's not a hard and fast rule, it's just one of those indicators that shows that, quite often a stock will have a lower floor that it tends not to break down through. And then, of course, it has a resistance level, which is the upper ceiling where it has a hard time breaking up through as prices are increasing. In the case of Bank of America Corporation, those are the upper resistance levels around 26 on average, the lower support levels around 20 on average. Now, again, this doesn't mean that it can't work outside of that, but within the last year, once the initial drop hit in March, it's had a very hard time breaking through that $26 mark on the upper side. And luckily, it has had an equally difficult time breaking down through that $20 mark on the lower side. Quick recap from where we are right now. Current status of Bank of America stock is still down drastically from the beginning of the year. We saw no real change with no real large change with a single large investor, but we did notice a change with impacting indicators, which were amongst the average shareholders. So just a general spike in volume. We saw the price drop and the price change drastically there. Next thing we're taking a look at are Bollinger Bands. Now, Bollinger Bands are really simply put, they are the pricing bands that show the trends on the upper side and the lower side as the stock price relates to standard deviation. Now, to factor this, we need the closing price, a simple moving average, which is we used a 20-day average of the closing prices. Also, the standard deviation, which is the difference on average of the same 20-day period, rolling 20-day period, of how much the price changed up on upper and lower. And then to calculate the upper band, we actually took that simple moving average of the closing price and we added to it 2 times the standard deviation. That gave us the upper band. And then for the lower band, we took that same average, simple moving average 20-day price, and we subtracted from it 2 times the standard deviation to get the lower band. And this gives us those ranges. Now, when we look at it with the simple moving average for 20 days, what we notice is that it's self-contained within the upper and the lower bands. It gives us a good idea of kind of where the stock has ridden on the high side and the low side, kind of smooths those jagged edges out. But the really pressing indicator, and the one that really gives us a good picture into how things are changing and what we might want to do in the future, is the one based on closing price. And what we'll notice here is you've got times where the closing price jumps above the upper band and times where it jumps below the lower band. And when it jumps above the upper band, those are sell indicators. And when it jumps below the lower band, those are potential buy indicators. Now, not hard, fast rules, but they're just ways for an investor to take and see when the stock is acting outside the typical behavior under the circumstances. Also, there are, of course, some certain assumptions that are made based on market conditions and volatility that the investor has to keep in mind. As far as future options when it comes to the stock price, we do see the stock price continuing its rise up. It will be very volatile, but as we look at the indicators from the Bollinger Band analysis, the stock price is still trending upwards, and there have been a few times where it has peeked through, which gives us the idea that it may still be have some room to go. So the recommendation is going to be to buy because Bank of America is still currently down approximately 27%. The market itself is volatile, but it is recovering. We've been seeing that as the pandemic kind of looms on and changes the way we do things. And the biggest thing is the current price is still off the historic and recent highs, while maintaining, good profitability and strong overall financial results. Um, as the market continues to recover, we could see the price push higher. Big thing we want to keep in mind, though, is that with any investment, there's always risks for market risk and also opportunity risk. The market conditions are going to be ever changing. We are recommending to buy Bank of America at this time. Hold if you currently own it. And that's it for today. Thank you so much and have a great day.